It would be great to have someone who could do our work for us, right? Someone to prevent us from making mistakes. Someone to assist with our routine professionally and allow us to devote our time to communicating with our closest people. If only we could get results without wasting our time for nothing. Unfortunately, it's impossible in real life. But wait, Light Forex Social Trading. Spend your time doing what really matters to you.
Hi guys, good morning. 26th of July 2019, 8 a.m. CET. Piotr here, meaning that's the pre-London Open live market coverage only here, Light Forex Global YouTube channel. Let's start quickly with risk warning. Guys, please bear in mind trading effects on margin, trading crypto on margin carries a high level of risk, may not be suitable for investors. You can sustain loss some or initial investment, so please do not invest the money that you cannot afford to lose. Seek education, gain experience before risking real money. However, past performance doesn't guarantee future results. Okay, so the first central bank didn't cut the rates. I'm talking about the yesterday ECB rate decision, but I think the stage been built for the September cut, 10 basis points. Also for me, I think that Draghi scared the market a bit with this uncertainty. That's what I've been expecting. That's how what's going to be the market takeaway after the last FOMC. Anyway, ECB gone, and I'm going to discuss. With Michał what might be next when we are talking about the ECB. But we have two more central banks coming next week. I'm talking about the Bank of Japan, and I'm talking about the FOMC. So before we are going to discuss euro dollar and all of this stuff happened yesterday with Michał, let's have a look. Let's start with the dollar yen and the huge strong move to the upside. What was behind, right? Because we actually at some point when we are talking about the indices, at some point we saw I would say strong sell-off. Especially we were covering live the DAX move to the downside. Clearly we recognized intraday supply that was very positive, but we saw dollar yen going higher, gaining higher, getting stronger, right? What was behind? Well, in my opinion, one of the main reasons was what was going on yesterday with US yields. That's the daily chart of the US 10-year T-notes, and we are talking about the yields, not about the prices right here. Anyway, the move was quite strong with the rejection at the end of the session, so a little bit of the upper shadow. From long-term perspective, after the breakdown, we just retesting the breakdown levels, right? So it's still, I wouldn't say that it's, we are going back. It's just the bounce from the psychological level of 2%, right? So we need daily close above 220, 225. We need the daily close above this level over here to try to neutralize this downtrend when we are talking about the yields. So probably we are going to get our answer next week when we are going to have FOMC. What was the move? partially the explanation which went through yesterday, it was that finally investors recognized that they overpriced 50 basis point cut next Wednesday, right? From the FOMC perspective, looks like the no cut from ECB yesterday was the trigger here, right? So watching carefully the yields and the dollar yen, especially that we have those two central banks, right? We have first Bank of Japan and then we have FOMC. So more fireworks coming into the dollar yen. Now, trying to finish the 10-year yield, 10-year T-note yields here. Again, I think right now it might happen. It's worth to watch over the course of the day, especially around the US session, especially after the US GDP, what's going to happen. Still, we are testing the range created on the 11th of July, right here. So that's what we are testing right now. So let's get back to the dollar yen. And I think, of course, we are going to discuss it in the full details next week, but I think it's worth to check where we are from the monthly chart perspective, all right? Because 2 months ago, May, there was a huge sell-off, right? Taking into the consideration monthly closes, right? It was the lower compared to what we had here in February and January. So that was the lowest monthly close. Then June, it was the retest of that broken range. All right. And lower. Now we're trying to build the swing low. That's the first thing. From the bull's perspective, quite positive. But on the other hand, we still got the monthly supply based on February open, and in that case we are talking about the levels close to 108.86. So yesterday we were talking that from intraday perspective, dollar yen is trying to trade towards 108.80. So we might try to build upper shadow. It's going to be important where we are next Wednesday when we are going to get the monthly close. From bear's perspective, we want to close below the high of the June. From the bull's perspective, we want higher close above 109. That would be great. What we are going to watch today, weekly perspective, I think here we are not going to discover the America if we agree that we are around the top of the range from the last 2, 4, 6, 8 weeks, right? So after the breakdown we've seen 9 weeks ago, last 8 weeks is some kind of the consolidation. So I'm going to watch carefully these levels close to the 109 today, right? I'm going to watch very carefully from that perspective where we are going to get the close, because if we are going to close above 109, that's gonna be positive sign. The support for today is the previous week high. In that case, we are talking about the 107.70. Oh no, sorry, previous week high. Oh, 24. 108, sorry, 108.40. That's the possible support. That's where I do expect some bulls, and supply, of course, around 108.80, 109 from that weekly chart perspective. So let's remove the consolidation. Let's switch to daily chart, and in that case, we have the supply also on daily here, just move higher. And what I'm going to watch very closely, because we hit more stops to the upside, if that's the consolidation, and if you remember the educational webinars we held in June, I'm going to watch closely this level over here, 108.94, because we might try to finish the business, and that's, yeah, that's what I'm going to watch from bear's perspective. Okay, and that's the stage for bulls from the daily chart. So it might be very narrow towards Bank of Japan and then towards FOMC, and do expect some fireworks after that. Hi Random, good morning. Great, very well done. Pound Aussie looks bullish for me as well, and we were discussing this. I think this afternoon, when we are going to cover the US GDP, if there are going to be a little bit of the time, I'm going to go through all those pound commodities and euro commodities as discussed yesterday, but we need to have a little bit of more time. So that's how I see the dollar yen. It's worth to mention that 107.50 we got 1.6 billion in expiration, and 108 1.6 billion in expiration. So that's where is the downside. That's what especially 108 might work as a magnet in case of the horrible GDP. But when we are talking about the US GDP, the expectations are low. So, you know, my theory is saying that that we might get better number. I've been thinking a while about that. So I think we might see positive surprise, and we might see the test of 109 here on dollar yen. The only thing is what's going to be the market takeaway in case of the stronger number, right? Because that's going to confirm we are not going to get 50 basis point cut, right? And all those latest moves to the upside on indices were based on these expectations that we are going to get this deeper cut. That's gonna be interesting. Let's switch to intraday chart here on dollar yen. And that's what we have from intraday perspective, the stage, possible supply. So I do expect some kind of the whoops. I do expect flag here. Okay, I do expect this to hold. So overall, I do expect this type of the price action a little bit lower during the London session, and depends on the US GDP. Probably we are going to retest this 108.80, 109, and it's going to be all about what next and how that might work. As you can see, everything is logical here, right? Everything is logical. The question from random is if I see US dollar being strong next week. To be honest with you, well, is the last thing, is the dollar is the last missing puzzle from the President Trump perspective, right? Of course, we cannot have a strong economy without the strong currency, but the pressure is so strong. And to be honest with you, I like how the dollar is trying to defend itself against that pressure. Still think that based on the dollar index, 100 psychological level is possible. We might see some kind of the spike, and especially that many trying to tell us that we are around the end of the cycle. So from the medium term perspective or longer term perspective, if we are not going to have any kind of the, Armageddon, we might see some kind of the consolidation, maybe a little bit stronger dollar. But once we are going to see the turn on the US indices, I think we might see some kind of the profit taking on dollar, and we might see weakened dollar. So I'm talking about this latest correlation, stocks higher, dollar higher, right? Yeah, we will see. I don't want to make the verdict, big verdict today. Let's have a look where we are at the end of the week, and let's see how we are going to start next week. What's gonna be the market expectations? That's gonna be the key towards the FOMC. That's how I see the things. For now, in case of the dollar yen, supply towards 108.80, 109. First intraday demand down towards 108.40. Possible bull flag, and we talk about the options a little bit far away for now. So when we are talking about the options, it's worth to mention where we are on euro dollar. We are trading right now 11.45, and we have 11.50, 750 million, 11.70, 1.3 billion, so above 2 billion here. We've got another 500 million, 11.75, and 1.2 billion, 12.05, another 500 million. So in total, we've got like 4 billions in between 11.50, 12.05. So I wouldn't be surprised if we are going to see the spike to the upside to finish the business here. So again, the options market may have huge influence today on what is going on with euro dollar. Just two updates to yesterday. I've been trading this euro dollar from the stage we discussed yesterday. As I mentioned, it wasn't worth to try to chase the market. It was not worth. So when I saw the pullback, I grabbed just few pips. So I covered the loss we had yesterday, but also I've been good here on the Aussie Kiwi. That's what we discussed yesterday during the first part of our meeting. So not bad. Few pips here, few pips there. So euro dollar after the ECB. So I think it's time to connect with Michał and to discuss what we've seen yesterday during and after ECB. That's random. That's the old correlation, I would say. The lately was dollar higher, stocks higher overall. Because with higher stocks, we saw, yeah, of course, overall, because of the latest expectations, the yields went strongly to the downside. But overall, when stocks higher, yields higher, dollar higher, that would seen ahead of those expectations of 50 basis point cut. Anyway, please stay with me. We are going to connect with Michał and we are going to have a short discussion about the yesterday event. Mr. Michał, good morning.
Good morning, Mr. Peter. Good morning, everyone.
It's good to have a Friday today, right?
That's right. That's right. After yesterday, this roller coaster, I think that it would be a good Friday.
It's a good Friday. We have a possibility to see another roller coaster later today after US GDP announcement. So let's discuss what we had yesterday. Just one clarification from the intraday perspective. After the ECB announcement, we saw spike higher, we saw spike lower, we saw the rally. So from the intraday perspective, plenty of stops been taken out. But overall, what's your takeaway after yesterday ECB rate decision and the press conference?
I as I mentioned yesterday, I wasn't watching your live stream. So if I will say something again that you mentioned yesterday, so please just correct me.
No worries.
Okay. So I will just say a couple of words about what Draghi said. He said that the risk at the euro area is tilting down the growth, especially in the manufacturing sector, and the most important in the countries that the manufacturing is the most important, like Germany, right? When it's like a big manufacturing hub for the Europe, biggest economy.
Let me disturb you here for a second, because you are correct. And yesterday when Draghi was saying that one, we were laughing. That's the very good point to push DAX higher, of course, as a joke. And DAX was higher, and completely I can get it. What those guys are doing. But anyway, back to you.
Yeah, and I will say something about my yesterday prediction. My approach was that the euro will slightly, even though the rates will stay untouched, the dollar will slightly beat the euro, and the price will fall, and it did. But after all, yeah, we saw the roller coaster that we spoke during the week. And at the moment we are on the entry point, like right on the somewhere around when the day started.
Exactly.
Yeah. So what else? Okay. Then getting back to Draghi, he said also that they already taken the relevant committees, euro area, eurozone committees that will examine all the options, what they can do. So it means that they were already preparing for the QE, right? And they already just said strong said that the QE is the QE is coming, and it's coming very soon. And all options are the table, the deposit rate, the QE, and the new quantitative easing, bond buying, and the rate cut.
Agree with you here. They built the stage for they prepared the market for the cut in September, and already the money market is showing above 90% chances of 10 basis point cut in September. That's you correct. You are right.
Yes, they were. Basically, the ECB said that most of the investors were expecting them to say. They wanted them to say. After that, they said that the statement was like the also they said that because they didn't want to lose the credibility, right? They just wanted to flex the muscles and show them that they didn't run out of options, right? They can do
But
something.
they did. That's why
Yeah,
we did. That's why we haven't cut
I will go
yesterday.
to that later.
They did.
Let me
They ran
finish.
out.
Let me finish. I will go to that later.
Okay.
Yeah, that's at the end I wanted to say, but at first I wanted to add everything what they were mentioning. Yeah, that they did what most people they were expecting, and later they were saying Draghi was yeah, like you said before a couple of minutes ago, that he looked worried. He frightened the markets a little bit. But yeah, he was trying to say that they will do everything. They will use all the instruments, and yeah, that the main main problem is the inflation, which is very below the aim. It's at 1.3 right now, and the aim is between 2 and 3%. So it's a little bit miss right now. And yeah, and I will go to the point that you were saying a couple of seconds ago, that they seem like all these options are not enough because this manufacturing not good manufacturing data, this terrible, we can say, manufacturing data, and the forecast for the manufacturing data is because of the trade tensions, and it's not in the measure of the central bank that they don't have such an instrument that they could do something about it, right? Yeah.
Exactly. I agree 100% with you.
So I think also the even though they will we can see right now, even though they said that they will do everything and like act aggressively, right, that they are already preparing and stuff like that, the market it's not impressed, we can say.
Exactly.
What else what I wanted to add, you just a little bit disturbed my
So sorry about that. Anything about the GDP? Are you going to join us this afternoon?
I will stay in touch with you in the next 2 hours. I don't know at the moment.
Okay.
But I want to also say a couple of things about the euro dollar, and that about the GDP that you said. Yeah, they lowered the estimates, and I think they will try. They wanted to positively surprise the market.
Exactly. That's my way of thinking as well.
So I also think in this way, and if we will see some bull attacks, some spike higher on euro dollar, it will be like a very short term, right? Because the overall outlook is very ugly.
I agree with you, and also what I think that we are okay. We saw some fireworks yesterday. We had this type of the roller coaster, but I think in terms of the trying to predict the ranges, I think to the upside max is 12.25, 12.50 on euro dollar. To the downside, let's say a post ECB low, so something around 111 and maybe some stops below. And I think we are not going to break down or break out ahead of the FOMC. We are going to, few stops to the upside, few stops to the downside, and that's some kind of the lullaby ahead of the FOMC next week.
That's that's what I want also to say, that we will have still the roller coaster till the FOMC meeting when everything will be clarified, right? They will also do what the market expecting, the 25 basis point rate cut. And then we will see some bigger move, beginning of the new trend downwards or upwards, right? But the positive thing is that we are trading on CFDs, so we just have to make a scenario for either of options, either that will go up or either that will go down. So yeah, I think it's all in our hands to just adapt to the situation.
That's pretty clear for me as well, and you're right here. So that's what we are going to try to do right now. We are going to try to prepare ourselves for London session from the euro dollar and pound perspective. Michał, thank you very much for your time.
Thank you also. Thank you for having me, and I hope we will see each other also before the GDP.
All right. Have a great rest of the London session. Goodbye. See you around.
See you around. Bye bye.
Okay, guys, so let's discuss this euro-dollar roller coaster we've seen yesterday. I think that one of the reasons we saw this move to the upside, that was the shorts who were looking for the ultra dovish draghi were covering, and that was one of the reasons. As I mentioned during the conversation with Michał, I do not expect the breakout to the upside above 12.25, 12.50 ahead of the FOMC, as well as I do not expect huge downside move. If you remember, we were doing few measures yesterday. So something like if we are going to hit the stops below the ECB low, so we are talking about the 1080, maybe 1060 ahead of the FOMC. From intraday perspective, what I have here from the euro-dollar perspective, I've been trying to think about some kind of the possible megaphone creation, right? So yeah, and that's, as you can see, showing something like 1080, 1060 to the downside, and to the upside 1225, maybe a little bit higher towards 1250. Right now we are in the middle of that range. We are also around the pre-ECB rate decision levels. So here, from that perspective, the stage, the possible demand we were discussing yesterday, been tested already, right? So right now, I see here few possible demand zones from the intraday perspective. First thing first, we might try to finish the business. Around the yesterday late New York session swing low over here. So that's the first possible demand, right? The second possible demand is around the low, post ECB low over here, right? It's also, as you can see, the red line, so meaning that it's levels related to the monthly chart. Also, the third possible scenario to the downside, and to see where the demand might be, is some kind of the easier measure in relation to the move to the downside. So we saw this initial rejection, and eventually we might see this 110.80, as I mentioned, maybe 110.60. If you remember, we were trying to predict some moves based on the what we've seen in June over here, right? So in that case, still is a space towards 1225, 1250, especially that we finally saw this correction we were discussing here. If you can see to the left, right, it's we went a little bit higher than what we expected, and the correction right now is a little bit deeper what we were expecting. But anyway, we are working around some intraday possible demand. So from my perspective, I think I'm going to watch carefully what is going on. I'm going to watch 11.33, 11.25 as a first intraday zone, then watching closely 11.15, 11.10. But it might happen I'm not gonna trade ahead of the US GDP. Let's see what's going to what's going to happen during the London, and then if we can get something around the US GDP. The weekly close is gonna be important here from that perspective, and I do believe that even if the bulls will have enough fuel, enough power, we are not gonna cross the weekly open. So overall, from the bulls perspective, probably the best scenario is to create lower shadow from the weekly perspective, all right, to try to close as close as possible to weekly open. On the other hand, from the bears perspective, with the scenario that we might end up a little bit lower, they are trying to create this big weekly range ahead of the FOMC. So that might be the case from the bears side. So from the bulls perspective, from the longs perspective, trying to summarize, 1134, 1125 to watch, then again something below 1115. From the selling perspective, I think we have to be patient, and the levels related to the weekly open might be in play. Now, cable. Here we are testing the bottom of the range we were discussing yesterday, okay? And what I'm gonna to look for, that's the important level from the bulls perspective are a little bit lower based on this manipulation point here we discussed yesterday and day before. So been tested once, right? Been tested already once. We're trying to hit some stops right now, and depends where we are going to open the London. If that's just stop count here and we are about to see the rally, or it's something bigger, right? Because right now we are below the Monday low. So yesterday during the late New York session we broke the Monday low again. We retest. Asian traders were not able to push higher, so we have continuation to the downside, and that's the big thing. We saw the failure again around 25.20. All right, so that's the negative. So in case of more weakness, 24, it's what bulls have to try to hold to avoid more deeper move to the downside. Sellers around weekly open and higher towards 25.20. More to come. I think that's important thing where we are going to be again around the weekly close. Guys, that's it from me. We discussed all the majors. Hopefully we are well prepared for this London session. Just a reminder, 2:15 p.m. CET, 1:15 London, and 8:15 Eastern, 8:15 a.m. Eastern. We are going to cover US GDP live, so you are more than welcome to join me later today. That's it from me here ahead of the London Open. Be careful, don't be trapped, and see you around this afternoon.